YouTubers, Mike Martin's here with the Mike Martin channel. Guys, thanks for joining me. Follow-up story now from the last two stories that we did. So what exactly are we following up on? Well, we're following up on story part 1 here. That's got quite a bit of views. Canada is crashing, and that has to do with basically the government's banking institutions, bond purchases, the government's asset sheet, the bank's asset sheet, and what's going when it comes to this mishmash of misinformation that we're getting and not being really told what lies in our futures economically for economic prosperity and wealth building. And I believe in wealth building, and I believe in saving for a future. Well, we've been turned a complete 180, and that debt is good, and debt is the best thing you could get into, and that is a big no-no. And saying that, oh, younger generations are more comfortable with that. People should not be comfortable with that. Okay? So this is the main story there, and then we followed it up right here with Bank of Canada in serious trouble. And here is part 3 right here. Bank of Canada ended the mortgage program that inflated prices. Kind of. This is from our friends over at Better Dwelling. Go ahead and check them out. So here it goes. Canada's central bank is still buying tens of millions of mortgage bonds. Bank of Canada. Data shows that the balance of Canada mortgage bonds, CMBs, they hold increased this week. The increase is a couple of weeks after the pandemic program to buy these has ended. However, it appears that it didn't mean they were going to stop buying them entirely. So Canada's been in a lot of a housing distress since pretty much 2010. Prices never corrected after the 2010 Vancouver Olympics, which they should have, because prices were out of reach for the average wage earner. Average wage earner in 2020 now is not even on the scale anymore. Average wage earner is sharing a room if they're not set up with parents and stuff, and a room with 7 other people or bunk beds in the dining room to help manage population control, so to say. But no, it's not funny, but it's true. And what's been happening? Well, here goes. Watch this. Canada's mortgage bonds. We've talked about Canada's mortgage bonds. They have, and we've covered it here quite a bit. But if you missed it, here's a quick intro. Lenders originate mortgages, pool them, then sell them. The pool mortgage-backed securities. So it's what happened with 2006, 2007, 2008 in the United States. They were packaging these mortgage-backed securities, whether they're bad or good. They didn't care, right? To the government to pay the MBS. The government sells the CMBs to investors for funds. The cash flow from the MBS is used to pay investors that bought the CMBs. Therefore, the CMBs are a state of backed security for mortgages financing in Canada, for mortgage financing in Canada. But here's the deal. It's backed, it's guaranteed, it is government backed, so it's more secure, right? But what's the return? The return is, I don't even know if the return's any good on these. I haven't really looked at them. Government-backed securities are usually very secure. We know that, right? So they don't pay investors much. Okay, they'll just answer. I know it's almost nothing. When investors' demand rises for CMBs, interest paid falls. It demands falls. Interest paid rises. Pretty straightforward, except when a country's central bank becomes the investor. That's the key right there. In this case, the activity of the Bank of Canada helps put a ceiling on rates that can actively drive them down. Last year, when real estate sales slowed without the obvious reason, the Bank of Canada decided to buy CMBs. Okay, again, we know this, and they're going to obviously say it's because of COVID, but this was happening. The purchasing wasn't happening before, but people were defaulting before. People, remember the article we read, 80% of Canada's GDP is based on housing. So the underpinning of Canada's GDP is based off housing. So Canada now exports homes. Even though they're built and they stay here, people just buy them and leave them empty because they're exporting them, like, if you know what I mean, right? The activity of the Bank of Canada helps. We got that last year. The real estate sales slowed with an obvious reason. The Bank of Canada decided to buy CMBs. It was for totally unrelated reasons, of course. It was totally unrelated reasons. I like how they word it. They bought them from non-corporative basis, which means they did bid against other investors. This capped the rates from rising at the start of the pandemic. They have began buying their competitive basis. This actively drove down the rates as they competed with investors. So rates are supposed to rise in periods of turmoil. Now, the one tool that the that these big financial organizations have is raising interest rates. We haven't seen raising interest rates in a long time now. And again, we created this Frankenstein bubble, and it's dangerous. You don't want people borrowing more things. Things are borrowing when things are getting worse. However, the Bank of Canada drove rates lower. That's exactly what happened. They had to drive rates lower because in Canada, they're having a really tough time now finding first-time homebuyers. It's not that Canadians don't want to buy homes and settle down and raise families. It's that Canadians can't afford to buy anything because the average wage earner and the higher bracket average wage earners from like 60 to 90K can't get into anything right now. However, when the Bank of Canada drove rates lower, that's exactly what happened. Real estate sales hit volumes while mortgage rates fell to record lows. The Bank of Canada blamed borrowers for borrowing. Okay, so now they're blaming borrowers for borrowing. But what about FOMO? What about all this garbage that was thrown out there? That should have been illegal, telling people and misguiding people. And what about all the banks' mishaps, all the garbage deals that the banks have put in the books? Look at what's happening with Westpac down in Australia. Look at all the banks down there getting sued and getting basically fined up the yin yang. Why? Because they broke protocol 21 money laundering protocol 21 million times. So what is it? What happens to the average Joe or the average Joe Donuts or the average investor or the average day-to-dayer? Well, I mean, they're left holding the bag, right? So the BLC blamed borrowers for borrowing. Of course they are. Then announced that they would end the program on the October 26th, except the balance of assets are still rising. Bank of Canada mortgage bond balance up 1,748%. There it is right there. Somebody emailed me and told him to give him a link of why it's so high. Well, here it is. The balance of the CMBs held by the Bank of Canada is still rising fairly fast. Even post-end of the program, the balance held research 9.72 billion on November 11th, up 3.45% from the month before. The increase works out to a 1,748%, 1,748.10% rise. So take out the 0.10 so it doesn't confuse you. It's 1,748% rise from the same week last year. Now look at the gap of time. So it's such a short gap, and look at the rise. If this doesn't ring alarm bells and tell you something really is happening here in Canada, then I don't know what to tell you guys anymore. If that sounds like absurdly large increase, that's because it is. Bank of Canada bonds, CMBs held by the Bank of Canada. So here it is. So you can play a little bit Tetris music. Ding, 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 ding. And look at it there in billions. Holy crapola. Holy smokes. So this should be an indication. I mean, I've been making videos for 5, 6, 7 years telling people, look at all the empty streets. Me walking up and down the streets in Vancouver. Look, people are leaving. People are mass exodusing. Who could buy this tear down house for $2 million? Average Canadians are bought out of their own markets. Canada's in a housing bubble. Blah, blah, blah. I've been saying this for years. No one thought any abnormalities of any of this stuff. They thought it was, that's just how it happens. The price of things go up and our wages stay down. No! They're massaging us into believing that's the way to live. Now, here it is. So now, if this isn't an abnormality for you guys, then I don't know what to tell you guys anymore. But here it is. Bank of Canada bond balance increased $122 million after the program ended. So it didn't end. Or so it ended, but no, it didn't end. The program was supposed to end in October, right? Well, October 28, 2 days after it officially ended, the balance was 9.6 billion. The balance has increased 122 million, or about 1.26% from then. That's still a fairly aggressive increase despite the end of the program. Now, this may answer one of the questions that was lingering. The program ended, but buying didn't. So the program ended, but buying didn't. In other words, they're still working to keep rates from rising. Some disagree. They just aren't buying on a competitive basis to try to drive them lower. I don't think so. And to drive this lower, there needs to be an absolute reset. And that's why we're going to start seeing bank implosions. You're going to start to see people with savings, and the federal bank could go in and take a percentage of your savings. We could see negative interest rates to help balance this out. This is way out of line. This is way out of hook, and People believing that this is the normal, or because of COVID, they're out of their minds. Anyways, guys, thanks for watching. Don't forget, guys, to watch the channel. Trends in the housing market. We had Randy Patrick on last week, and he's a really good American discussion, or what have you, when it comes to American real estate. Let me know what you guys think in the comments below. Thanks for watching.